Nobody has a live thing. Hey, babe. No, baby. I am good. Okay. Okay, let me work this out. Okay, Kiruba, you can. I'm just going through Daniel's instruction. Okay, so Kiruba, when you do you want me to do the intro and then you share your screen? Can you? Man screen. Okay. Okay, so we're almost ready to go live. Can everyone hear me? We have 30 viewers. Let me have a quick chat with Kiruba and then we'll get started. One sec. Okay, I'll get an invite link for Kiruba chat. Cameraman invite. Hi, mate. Did you get an invite from which? Let me send you another email. Which Another invite. Which one did you want? support@squareoff.in?
Yes.
Support@squareoff.in. Okay, so you should have that in your inbox now, and you click it.
Okay.
Got that one? Sorry, guys, we're just having technical hiccups until we get Kiruba sorted. Okay. Okay, you there, mates? Sorry, people, we'll have this sorted out in a moment. I'm just not the most technically competent person in the world. It's just the way it is for me.
Okay.
All right. Nice to have you online, Kirubakaran. Is that how I pronounce it?
Am I audible now?
You are audible, sir.
Okay.
Okay, we have 46 viewers online, so I'm just going to very quickly, I'm not sure if I'm pronouncing his name right, but Kirubakaran is someone I've long admired on Quora.com. He is an extremely good Indian quant trader, and what I particularly like about him that sets him aside from the vast majority of people is that he's all about systems, and he's a very good system trader, and he is strong in the area where I am personally a bit weak. So I'm really looking forward to learning about this particular edge, which is a very well-known edge. There's a lot of statistical data behind it. And so, Kirubakaran, what I'd like you to do is to, on the left-hand side of your screen, if you mouse over, there should be a screen share, and or you can share your video clicking on the top, either or, whichever way you want to do it.
Okay, I got it.
Yeah. Got it?
Yes.
Okay, I'm going to mute my microphone and hand it over to you now, and I'm anxiously looking forward to it.
Okay, Scott. Sure. Yes, good morning, everyone. So, just to make sure, is my voice audible and are you able to see my screen? So people can respond over the chat session so that now I'll have a confirmation. Great. So I could see, okay. So my screen is visible now and I'm audible now. So we'll proceed to start with. My name is Kirubakaran Rajendran and I'm the founder of the firm SquareOff.in. It's an algo trading firm where we run multiple algo trading strategies for the clients and our own accounts. So in today's session, I'll be covering about an intraday trading strategy. So before I could explain about this strategy, so how many of you here or into intraday trading who are already into intraday trading? Like they could be working, but still on a part time, or if you are still doing your intraday trades. So just wanted to know how many of you are already an intraday trader or day trader. Okay. I see people are responding that, yeah, a few people. I am, but not having time. I did intraday just for 3 days. Okay. Most of the people are already into intraday trading, and I could see that few people do have time constraints. So that is the one, no, first important thing. So most of the folks here, who are already working, and they would be busy with their day job, but since they do not have no times, or they would be busy with their meeting at their office, so most folks, they do not have no time to place the trades or no do day trading thing. So the main thing is, we need to keep monitoring the screen, or people keep checking the screen every now and then to place a trade or to find a better trading opportunity. So when I developed this system, I had only one thing in mind, where I do not want to make, or I do not want to spend more time staring at the screen. So all I wanted to do is just spend few minutes of my time doing the analysis, and once the analysis is done, I should go ahead and trade with it. So I was looking for a system which I could trade whether I am at the office or I'm at meeting, wherever I am, but I should be able to trade with ease without no having much complexity towards it. So that is how this NR7 modified intraday strategy is designed. So before I go ahead and explain about this NR7 intraday strategy, so how many of you here already are aware of the term called NR7, or narrow range 7? Okay, a few people came to know about it from Quora. Yes, that is a famous setup from Toby Grable. Yeah, good. So, most of the folks are already aware of the NR7 strategy. Some people have no idea about it. Anyways, so before I explain about our modified setup, I'll first explain what is this NR7 strategy, or narrow range 7, is all about, and then I'll go ahead and explain about the modified rules that I have did it. So basically, NR7 strategy is nothing but, no, it's a kind of range contraction and range expansion method, where market usually goes through regular contraction phase, where the volatility will be low at times, and after a certain period of shorter range periods, the stock or the market, whatever the instrument that we trade, it tends to expand, like it moves up and volatility shoots up, and it goes in a breakout or breakdown on any of the range. So once any of the stock goes through any narrow range period, it tends to give a bigger breakout, either on the upper side or on the lower side. So the idea is to basically to find such stocks which are trading in narrow range, and to filter out those stocks and then trade on it accordingly. So the rules are so simple. So it is no complex, or you don't need any charting platform or trading tools or any specific indicators to trade this setup. Even if you have an Excel, that is more than sufficient. So first thing is, we need to get the day high and day low, and we need to get the range of the day for the last 7 days. So this is how it is. So if you could see this chart, so this is a chart of Reliance Communication, which trades in the Indian market. So we need to check what is the range each day for the stock. So starting from 15th, we would be checking the day high minus day low. So we calculate the ranges every day and find out what is the range on the seventh day. If the seventh day range is narrowest of all seven, then the seventh day or today's should be considered as a narrow range 7. I mean, narrow range day. So basically, you have to calculate day high and day low each day for the last 7 days and find out if the range is narrowest of all for today. So if today is the smallest range of all, which has very least range for the last 7 days, then that should be considered as a narrow range 7 day, or seventh day, or NR7 day. So once we have this NR7 day, all we have to do is find out what is the day high and what is the day low. So as you could see, 1, 2, 3, 4, 5, 6, 7. So starting from 15th to 23rd, the stock was trading narrow at a very narrow range. Each day the range is getting narrower and narrower. And finally on 23rd, that was having a very narrowest range of all, where no the high minus low value is so low, and where we could consider that as a NR7 day. And we take up this high value and low value, and the next day what we have to do is, if the stock breaks up this high value, then we go long. If the stock breaks down this low value, we go short. The rules are simple. So if the next day you have this high and low, and if the stock starts breaking out and starts moving up, then all we have to do is just go long with the day's lows, the previous day's low as a stop loss. So as you could see, the next day the market started exploding. Like the outcome was in narrowest range, and all of a sudden at the end, it started moving up rapidly. And this is what the NR7 strategy focuses on. So if you have 5 to 10 list of stocks where you can keep track of the narrow range stocks, and once you have the list, the next day you can just directly go long or go short based on the breakout levels. So what we usually do is we pick up the narrow range stocks on a daily basis, where we, with our own data sets, we scan for the stocks which satisfies this NR7 condition, and then we usually post it in our Telegram channel. This is our channel where we post it on a daily basis. I'll share up the Telegram link and everything. So usually we share up this list to our channel on a daily basis, where people will get to know, okay, these are the kind of stocks, or these are the stocks which satisfy the NR7 with the buy trigger, with the stop loss, short trigger, everything. So we usually put up this list and we send it to our users, so that people the next day who are intraday traders who wanted to trade any specific stock, who are looking for stocks to trade, they can shortlist these stocks and they can trade accordingly. Because most of the intraday traders, the main issue that they face is they do not know which stock to trade. Even if they have a certain list of stocks, they find it difficult when to enter or when to exit. So when you have a list of stocks with precise entry and precise exit rules, you can directly just go out and place the trade and continue with the work. Like you have the list of stocks, okay, next day, if there are 3 stocks from this list, you can pick up this stock and place a bracket order, where you can place both the buy order and the short order, and then continue with the work, so that you don't need to keep monitoring it. If the levels are breached, your trade's gonna get executed. Otherwise, by the end of the day, the trades would be cancelled. So what we have to do here is say, so this is what I said. So say, let's consider an example of a stock GSFC. So you have a buy trigger and you have a sell trigger. So all you have to do is you just log into your trading broker portal and place a buy order, and you can place a sell order. So you have both the orders placed. So if the market starts moving up and goes and hits your buy order, then your sell trigger will act as a stop loss. But if the market starts moving down first, then your sell trigger, where short order will get executed, where your buy order which is pending will act as a stop loss. So you don't need to again log into the system and again place and a stop loss order. Since once the order is placed in the morning, you are free and you can continue with the work. So this is how the normal NR7 strategy is. So there are certain issues, or there are certain disadvantages where people face if they plainly trade this NR7 breakout system. So what happens is, as you see, there could be more number of stocks, or the number of stocks that comes up in the list on a daily basis. If it is, say, suppose 10 stocks or even 15 stocks in a day, how could a person who is not a full-time trader, or who is working professional, they do not have a time to place all the 10 orders at once. So either they have to automate it completely, or the placing 10 to 15 orders will block huge margin of your capital, and moreover that would result in higher number of trades, which would increase the total overall transaction cost. So our idea is to keep the trades lesser, so that we do not end up paying higher transaction cost or the brokerages and commissions. So we had come up with modified rules. So so the using the modified rules, what we have did is we have considerably reduced the number of trades, and also we have increased the winning accuracy, and also we have made it more easier to trade, so that you don't need to place multiple trades at once, or you don't need to monitor multiple stocks and then place a trade. So before I explain the the modified setup, I just wanted to make sure if people are getting my point, if are they clear about the normal NR7 setup that I have explained so far, so that only if you are clear about the normal rules, I could go ahead and proceed with the modified setup. There is a question asked by Sudhir Trika: should we change trigger point of stop loss or target midway in session if trade going to reverse? No, there is no need to change anything. So whatever the stop loss or the trigger, so you should go ahead with it. There shouldn't be any change with it. So once I explain the modified rules, it would be more clearer. So let me explain the modified setup now. So what happened is, so this is people, some, since many people are not aware of the NR7 strategy. Earlier I used to write multiple articles in Quora and Medium and other posts, and I was explaining about the advantages of it and how one could trade with it. But what happened is, after we shared all these details, there are certain feedback that was given to us from our Telegram group, where they stated that sometimes there are more than 10 to 15 stocks that comes up in the NR7 list, and it is difficult for them to place all orders. And what happens is, sometimes the trade will hit their stop loss first, and it would reverse in opposite direction, and then it would go in one direction. So if they have not taken the first trade, they would have been in a profitable zone, because the first trade resulted in a false breakout. So most of the time the NR7 strategy could result in a false breakout. So I modified it accordingly, so that if we could focus only on this false breakout trades, definitely we could end up making higher profits, and also the winning accuracy could also increase. So, and second thing, we will not have no 10 to 15 stocks to place the trade. So it'll be very minimal, because what happens is, say you have a stock, and if the stock hits your buy trigger, there is only two scenarios that could occur, where once a buy is triggered, it could continue to go up, where you could make a good returns or positive returns from it. Or once it moves up over a certain period, maybe 0.5% or 0.2%, it would again decline and start reversing. That there could be a trend reversal in the stock, because of no huge selling pressure, where the stock would die from there and keep going down. So in order to take advantage of the second scenario, so we have modified it accordingly. So let me explain this example. So this is an example of Exide industry stock, where now I have marked the breakout level and breakdown level. So all you could know, the basic setup is, as we know, if the breakout occurs, where if the the stock starts moving up greater than 250, we go long. If it's going down below 246, we are going to go short. So this is the basic setup as per NR7. So from the modified setup, what we have to do is skip the first trade. Simple. So whenever there is a trigger that is going to happen, you better skip the first trade. So as you see here, so once the market opened, the stock slightly started moving down. It was now continuously trading in a very narrow range, and then by 1 o'clock or after 1:30, the stock gave a breakdown. It triggered the sell trigger. So in this case, we should not place any order at all. No, we should just skip this first order. So whenever the first order or the breakout or occurs or breakdown occurs, we skip the first trade here. So in here, what happens? As soon as the stock hit the 246, where the breakdown level is hit, I will go ahead and place the order for buy where it is at 250. So now I will go to my system and place a buy order for 250 and wait. So here there are two scenarios that could occur where once a breakout is done, the stock would continue to go down and start making returns for you if the short order is done. But since we have not placed any short order, we are not going to make any profit, and also we are not going to lose anything because we have just placed the opposite order. We have placed the buy order here when the short happens. So if the stock continues to decline, we are not going to make any profit, and also our order is not going to get triggered. No profit, no loss. If after the breakdown, if this is what happened, say after a breakdown it did not go down further, instead it reversed from here. So what happened? It reversed and triggered our buy trigger where our buy order is executed, and then it started moving up rapidly. So this is the false breakout that we are aiming for. So whenever there is a first order that is getting triggered, we'll always ignore the first order, and then whenever the first order is triggered, immediately you place the opposite order. So until then you have to wait. You should not place a buy order or a short order. Instead, you directly go ahead and place the second order when the first order is getting triggered. So as I said in the example, let me just explain it one more time. So for the modified rules, all you have to do is skip the first trade and focus on the second trade. So here when the breakdown has occurred, as soon as the breakdown has occurred, we are just going ahead and place the buy order and we're waiting for it to trigger. And if the market is reversed, then our order will get executed, and then we'll be exiting with the fixed ratios. I mean fixed target ratio. So usually for the target thing to consider, we usually keep 1% as a fixed target where we do not wait till EOD. We'll keep a fixed target of 1% where if the target is hit, we'll go ahead and close the trade. So I've seen some questions I've gone through, and some all the stocks in that case. Stochastic is slow. So there is no relation between RSI, MACD, or stochastic or any indicators to deal with this strategy because we are specifically focusing on price alone. So we are not focusing on any indicators. So you can skip any of all these indicators and focus only on the price levels. So all we have to do is focus on the price, wait for the first order to get triggered. As soon as the first order is getting going in one direction, then go ahead and place the actual order. Until then, there should not be any orders placed in the system. You just wait for the stock to move up or move down in any one direction. Once it goes in any of the direction, place a trade for the opposite direction. So here, as you could see, the stock moved down in one direction. Then we have placed a buy order, and as expected, the stock reversed and went up, and it are even the 1% target. As soon as it's hit, we'll exit it. We have considered this 1% because we have run a normal distribution. I mean, we have found out the return distribution, and we have seen what is the maximum number of time the stock has moved in our direction after a trade is triggered. So as you could see, the maximum number of occurrences is around 1%. So whenever a trade is triggered, it has a maximum or a high probability that it could move up greater than 1% at any point of time. So if we could lock it at 1%, then we have a fixed target, and we have a higher winning accuracy. So we usually keep the target as 1% and then exit the trade. So as soon as the trade is triggered, we exit when the target is hit or when the stop loss is hit. If both is not hit, we will exit by end of the day when the market is going to close. So this strategy works really well with stocks because for the index, if you're trading with an index, you get a very minimal number of trades. So not every day the bank nifty index or the nifty index going to come and satisfy the condition of NR7, because if you have multiple stocks to trade, even one stock or the other stock could give you a breakout, and your success ratio drastically increases. But if you're trading only on the one index, then it would be difficult to make a higher winning accuracy in that system. So that is why we are applying it for stocks, because even if you are applying it for stocks, say there could be 10 to 15 stocks, but out of that we would be getting only 3 or 4 trades getting triggered or executed in a day. So so as I said, whether since we are focusing on the counter trend, so we end of the day whether the order is going to get executed or it's going to get cancelled. So if we are placing 10 trades in a day, so on an average only 3 or 4 trades will get reversed like this and hit our target most of the time. And it has a more than 72% winning accuracy as far as we have tested. So, 72% of the times you're going to end up in no profitable zone. If you're calculating on a monthly basis, definitely it should have a more than 90% accuracy, where 90% of the time you're going to end up in a profitable zone by the end of the month. So, and the thing is, so I have a couple of questions. I'm getting it here, and let me check it out. This works in different market sentiments, trending, sideways, bearish. So no, that's what. So if the market is really trending, so what happens is if the stock would continue to decline in one direction, and obviously whatever the trade that we have placed would not get triggered, because we have placed opposite direction. So that would be in a pending state. By the end of the day, it's going to get cancelled. And what happens is most of the times, if we have a stock after a period like once the European market opens or once the other market opens post 1 o'clock or post 2 o'clock, the trend sometimes gets changed for some of the stocks. So when that changed, that is where the stock our profit comes, where our stock tends to reverse and go up and go up and hit our target ratio. And sometimes what happens is as soon as the market opens, there could be a gap down. There could be a big gap down or gap up because of overnight political news or any geopolitical news or any other news that has affected the US market could affect the Indian markets. So when there is a gap down, what happens is most of the stocks would open gap down, which would which would be below our short trigger. So in this case, what happens? There is a 90% of the time whenever there is a gap down, it tends to be introvert, like it tends to move up. Similarly, when there is a gap up, it tends to move down. So in this case, so when our stock is gapping down, then we would be placing go ahead and placing the buy order and will wait. So once the markets after a gap down, it would settle and start moving up, and that is where we would make money, or we would know our profits gets triggered, because after a gap down the stock would continue to move up and hit our buy level, and then where our target could be reached. So this particular setup is completely traded on the equity cash market because of the position sizing flexibility that you have. If you're trading with futures market, the problem is you have it in lot sizes where you have to trade in multiples of hundreds or thousands. So your risk could be completely going for a toss, because some stocks go trades with hundreds of lots, some stocks trades with thousands of lots. So you will not have a predefined risk parameter. So it is better to stick with stocks equity cash market, so that you can adjust your position size accordingly. And the one more thing is, say suppose you are placing, so the other thing, yeah, the other solution that we had is, say whenever you watch a list of stocks, and if you're a full-time trader, then not a problem, because you can just scan through the list of stocks, or you could set up an email alert for any of the trigger, so that when the one side trigger happens, you can go ahead and place a trade for the next leg and continue with the work. So in order to simplify it further, we have created a Telegram bot, so that no, it would be easier for the users. So no, it will be like it would send you an alert. Okay, so there is an escort starts moving up, and now when it hit a higher a buyer breakout, it would send a sell breakout order. So escort has gone up and hit a buy level. Now it is time to place a reverse order. So go ahead and place a sell order with this price with this stop loss. So what happens? Along with that order alert, I also get a button to click it. Where if I just click on the button, it would directly go ahead and execute the trade in my Zerodha account. So it would be much more easier where I don't need to actually monitor it. So this I actually created for my own purpose, so that I could focus on my other work, and whenever the alert comes I could directly click on it and execute it. And later since people requested, we just expand it to the other users. So with this strategy, you do not need to focus on other indicators. So please note down. So you do not add multiple indicators towards it. Don't add 200-day moving average or multiple moving average, or do not uh, add your own conditions towards it. So what this condition or this strategy specifically focuses only on price, nothing else. So all you have to do is, once you have this price levels, and once you have this setup, just directly go ahead and trade blindly with it. You do not need to have your own bias. Say suppose if the Reliance is, say suppose for a stock Reliance is giving you a trigger, a short trigger, and you are going to place a short trigger. But if you see other news channels or other social network and see some bullish news related to Reliance or whatever the stock that you're going to trade, you do not have your own intuition towards the system. So if this is a system, you just trade plainly with the system. You do not bring in your own discretionary towards it. So because whatever the things that we have explained is completely tested, and we can be more sure. Even if there are no 3 to 4 stop loss that gets hit, I could continue and go ahead and trade the ninth trade or the 10th trade, no matter what, because I'm specifically following my own trading system. So if I bring in my own discretionary towards it, then it would be difficult, or it would be really you will not have a complete a proven system, because you are bringing in your own discretion towards it. So it is better to follow the rules 100% of the time, and do not change over the rules, or do not bring in or do not modify from it. And one more thing is, so there is position sizing rules that I wanted to explain with this. So what happens is, say you have 5 stocks. So this is how the list is. Like daily basis, I prepare this list on Excel. Like what are the stocks that satisfies NR7 condition, what are the triggers and everything. And by the end of the day, I update this ledger whether the target is met. If the target is met, what was the total profit? So everything I maintain a ledger. So this I've been maintaining since this year, May 2018. So since May 2018, for the last few months, it has given almost 54% returns if I have a 1% target ratio. Like if I'm exiting the trade with the 1% profit. If I'm exiting by EOD, no target, if I'm just simply exiting by EOD, I have a 45% of returns. This is excluding the brokerages and slippages and everything. Even if you include those transaction costs, it would end up giving more than 38 to 40% of returns. Since we do not spend so much of time for so much of money for the brokerage here, because there are multiple discount brokers here where they charge you a fixed rupees no matter what quantity you're doing. So coming to the position sizing, so before I explain the position sizing rules, let me just explain the modified rules once again. So we are waiting for the first order to get triggered. Once the first order is triggered, then we'll go ahead and place an actual second order into the system. So I'll explain with an example again. So here you have the buy order, you have the short order. So the first order is getting triggered here, where 246.3 was the first order. It got short triggered. Now we have gone ahead and placed the buy order at 250.8. So when this buy order is placed, you use this now low, the sell order or the sell level as your stop loss. So skipping the first trade, placing the second trade with a stop loss of the lower level. And once higher level is getting triggered, this lower level should act as a stop loss. And if it reaches 1% target, you just exit it. If the target is not reached, exit by the end of the day or exit when the stop loss is hit. After we skip the first trade, what is the stop loss for the second order? So as I said, so once the first order is skipped, place the second order where the previous low levels will act as a stop loss. Yes, the first trade is not placed at all. So when I'm saying the first order is triggered means you just wait for the first breakout to occur. You're not actually placing the order. You're just waiting for any one of the levels to get triggered so that you could go ahead and place a second order. So you are not going to punch in any orders unless and until any one side of the stock. Unless one side the stock moves either the upward or downward. Only then we are going ahead and placing actual orders into the system. So once say what happened here, if the stock reversed from here and going up, if it hits the stop loss, do not go ahead and place one more order again on the downside direction or on a short side direction, because the stock has already reversed and we have already into the trade on the opposite direction. If the stock is going down again, then that stock would end up in a whipsaw movement for the complete day. So it is better to avoid with just one trade. Just placing the opposite direction, wait for the order. If it's getting triggered, that's fine. If it is not getting triggered, or if it is getting triggered and reversing and hitting the stop loss, do not go for a revenge trade or do not go with the opposite direction. Just exit it. Just one trade, that's all. So is the modified rules clear so far, so that I could go ahead and explain the position sizing rules? Perfect. Okay, perfect. So there is no specific which time frame is suitable for this strategy, 15 minutes or 30 minutes or 1 hour. There is no time frame here because we are not dealing with the charts here. We're not dealing with any patterns here. So simply, when those levels are going to get reached, you're going to enter into a trade. So you can plot with 5 minutes, 15 minutes. It's just a visual representation to know for your comfortableness. So you don't need any specific time frame for the charts. So let me explain about the position sizing rules. So before I explain about the position sizing rules, there is one important thing that I would like to explain you. Just a second, let me do that. I wanted to save that link before itself, but somehow I missed it. There is one explanation that I have given it already. I'm just looking for that explanation. Just a second. So by the end of the session, I'll share these links also so that it will be easier for everyone. Where is it? Just hold on a minute. Let me take that. Is my screen visible still? Just wanted to make sure. Where is it? Yeah, I got it. So this is the thing that I would like to explain. Okay, so this is one of the best example for position sizing. So once I explain this scenario, then you could relate to it when I explain the position sizing next time. So what happens is there was a Greek mythology story. So where there during the ancient Greek times, there used to be a wrestling match that happens once in a year. So one such match was planned between two wrestlers, where they are the most qualified wrestlers or the top wrestlers in their place. So they have scheduled a match between these two wrestlers, and they have given a time frame of 1 year so that they could prepare and get ready for the wrestling match. So what happened is both these folks, they wanted to train hard so that they could win the match when they could win the wrestling match. So both the folks started preparing for it, and there is one guy who just bought a calf so that he could lift it and practice it, and there is one guy who bought a bull, a very big bull, so that he can train so hard and lift it so that he could be a better wrestler when the match comes. So the guy who bought this calf, everybody were laughing at them because this guy is a wrestler. How could he's just buying a calf and trying to train with it. And however, the other guy who bought this bull, he was trying to lift it vigorously so that he could show his strength at the match. So what happened was the guy who bought this calf, he was able to lift it easily, with ease without much pressure because the calf doesn't weigh much. So he was able to lift it daily and he was able to practice it. On the other hand, the guy who bought the bull, he was trying to lift it every time, but he fails because the bull weight is so high and he couldn't lift it at all. So over a period, like over that period of few months, the guy who bought this calf, he was able to lift it with ease, and over the period, this calf also has grown. So after a few months, the calf has grown and he was able to lift it daily basis, and he's so used to its weight, so he doesn't even realize that the calf is growing. So over a period, he was able to lift the calf, which was growing steadily, and he was able to lift it. And when the calf was fully grown into a bull, he was able to lift it very easily. But the other guy who was trying to lift the bull from day one, he couldn't lift at all. But this guy is so used to it, and he's been training daily with the lower size, and over as the size grows over and over, he's used to it. And when the match comes, this guy was able to lift the calf effortlessly because he was daily dealing with this calf, and this calf has grown as a big bull by the over a period, and he was very much it was very easy for him to lift it, whereas the other guy, he was still trying, and he failed miserably. He couldn't lift the bull at all. So this is how the position sizing is. People usually learn a strategy, they get excited, they feel okay, this is something kind of a holy grail that I have found out. Now I should go and trade with the capital that I have. So what happens is if they have this 1 lakh or 2 lakhs or whatever the capital, 100,000 or 200,000, whatever the capital they have, they go ahead and put all this capital into the strategy that they have just learned it. And what happens? because all the strategies are prone to drawdowns or prone to fluctuations. So after a period, they lose hope in that system, or they lose confidence in that system, and they do not continue with the system at all. So that is why it is essential to trade with the size that we are comfortable to trade, we are comfortable to lose, so that we'll be getting used to the system flawlessly. So if I develop any system, whatever the system, whatever the risk reward ratio is, if even if it is too good, I just go with the money that I could afford to lose, and I'll find out whether I could trade this system or I could execute the next 100 trades effortlessly. If I able to do that, then only I'll pump in more capital, then only I'll allocate more capital towards the trading system, and I would trade. Because if I am not able to trade the first 100 trades with ease, then definitely it means that that trading system is not suitable for me. So instead of me putting all my capital and blowing the account, I should first test the waters and I should get used to my trading system. And once I get used to it, that is where I'll be more comfortable, and I would be I would not break my trading rules at all. I can no matter what the geopolitical events are, or what happens in other stock market, other international markets. I would just blindly trade my system because I'm so used to it. So that is what the position sizing will help in. So you should know how much you are risking. So because all that matters is not a 90% accuracy system or 99% accuracy system. That it is how much you lose when you're wrong, and how much you make when you are right is what all matters. So we should know winning accuracy is actually a least important criteria in a trading system. You shouldn't give much importance towards it. So the risk reward ratios matters. So with that in mind, let me explain this position sizing rules. So now you have two options to trade this NR7 modified rules. So one thing is, say suppose you have a capital of, say here, now I have considered an example, say 5,000 as my capital. So what happens is I just divide my capital by the share price. So if a share is trading at 100 rupees, then I divide my capital 5,000 by 100, which gives me 50 quantity. Then I go then and I'll place a trade for this 50 quantity, because that is the maximum number of stocks that I could purchase with 5,000. Then I'll go ahead and place with this quantity. So with this type, what happens is when your trade goes wrong, usually the NR7 method, when you're trading only on certain period, the range could be wide, or the stop loss could be wider, where you could lose 2% or even 3% if the stop loss is hit. So when you're using this type of position sizing, where deploying your full capital in each stock, since we are trading, the point to remember is we are trading on an intraday basis, where we are trading with bracket order. We are placing target, stop loss, and everything here. So the margin required would be very minimal, because Zerodha charges gives you almost 20 to 27 times of leverage with the bracket order facility, where if you have a precise target, stop loss, and everything, then the margin block would be very minimal. So here, even if you have 1 lakh of capital or 100,000 capital, you could still able to place multiple trades, because the margin block would be very minimal. So what happens is, say suppose I have this many stocks on Monday. These are the list of stocks that I'm going to trade. So for each of this stock, I would be placing the quantity as per my capital. So this is the Excel sheet that I would be sharing with you all by the end of the session, where if you enter the capital here, then the position sizing rules could tell you, okay, this is the number of shares that you need to buy. So I have defined it two different scenarios. One is just put in all your capital in each trade. So if the trade is going to hit your target, you're going to make 1% of your capital. If it's going to lose, sometimes you could lose 2% or 2.5% also. But if you do not want to lose more, so see, if you have a predefined risk criteria, I do not want to risk more than 1%, no matter what, then in that case, you should modify the position sizing accordingly. So say suppose my capital is 100,000 and my risk is 1%. So in each trade, maximum I could risk is 1,000 rupees. That's all. So now you should calculate your position sizing, or the number of shares that you need to buy accordingly, so that even if it is going to hit your stop loss, you are going to lose only just 1,000 rupees, which is just 1% of your capital. So if you do that, then this is the column that you need to focus, which is the number of shares, which is nothing but the risk. So your buy trigger and sell trigger, the difference between these two is what we call it as a risk. So I'll explain in detail with this example here. Say suppose, okay, consider your capital as 1,000. So while this example is much more easier to understand, say consider your capital as 10,000 rupees, and you find, okay, there is a stock which trades at 100 rupees, and you want to enter into that stock, and you fix 90 rupees as the stop loss. So now your risk is defined, which is just 10 rupees, which is entry minus your stop loss, which is going to tell you, that tells you the risk. So now you have the risk levels or the risk price. So now you should decide how much you wanted to risk. You are saying that I wanted to risk only 2% of my capital. So my capital is 10,000. 2% of my capital is just 200 rupees. So you have decided that if this trade goes wrong, I would lose only 200 rupees. So now you need to find what should be the number of shares to purchase. So to come up with the number of shares, all you have to do is just divide this one, where 2% of your capital, divide this risk thing by the stop loss, the entry minus stop loss thing. So 200 rupees is what 2% of your capital is. Divide that by the risk values. That would give you the number of shares. So 200, if I divide it by the risk of 10, then I get 20. So if I buy 20 shares, then no matter where the stock moves up, if it is going to hit my stop loss, I'm not going to lose more than 2% of my capital. So this way you can now continue to make more number of trades, so that even if you face some streaks of losses, you will not lose no more amount of your money or no more amount of your capital. This will limit your losses together, or you will not be feared about the losing streaks if you follow the position sizing rules. So instead of blindly trading with just 100 or just 200 number of quantities, it's better to use based on your risk appetite. Some people would be risking just a 0.5% in each trade, because they'll be making more number of trades over and over again. So they'll risk less than 1% also. So it's all about your own risk appetite. So fix out what should be your ideal risk size, and then if you can just enter your risk capital here, and then that would going to tell you, okay, this is the number of shares you need to buy. So once you have this list, so that's also, you have all the list, you have the number of shares. Now you have two ways. So either you could just monitor all the stocks and wait for the first order to get triggered and then place a trade, or else you can use this Telegram service, where the bot that I have said, where you will be getting an alert like this in a Telegram, where as soon as the Telegram bot would keep scanning all the list throughout the day between 9 o'clock to 3:30 until the market closes, and whenever the our modified rules conditions are met, it would send out an alert like this. So all you have to do is you will get an alert like this in Telegram. You just have to click on the alert, whether if it is a buy alert, you'd be just clicking on it, then where you would be getting a pop-up for a confirmation. So it would directly place all the orders in your own broking account with Zerodha. So it will tell you this is the quantity, this is the stop loss, this is everything. So once you place, the order going to get placed. If by default there would be a default quantity already pre-filled. So as you can modify this quantity as per your capital here. So as we know the number of shares that we need to buy changes based on our capital, we can simply modify the quantity here and place a trade. So once the order is placed, as I said, the required margin is very minimal. So you get a 27 times leverage, but make sure you do not take over leverage. So this is just to make sure to give you a comfortable no acquisition capital. So no, do not take, so just because it is asking you a margin required as 1,000, just do not trade with 5,000 rupees or 10,000 rupees and take leverage 10 times and 20 times. It's better to follow the 1% position sizing rules that I have said, so that no your margin blocked is also minimal. Moreover, your risk is also limited. So as soon as you're going to place a trade, the order will be in the pending state in your Zerodha account. So only when the stock reverses and moves in the opposite direction, your trade is going to get executed. So the best thing is, it is not like the multiple Telegram channels that you see across web, which is available, where as soon as they keep sending you buy this, buy that, sell this, click that, sell that, because you don't need to know rush in any way, because we are placing a counter trend here. So when we are placing Dish TV sell order here, it means that actually Dish TV has actually triggered a buy level. I mean, it was trading in the day high, or it would be definitely trading in the upper direction. Now we are placing a sell order. So only when the Dish TV reverses from the upper direction and starts drifting lower, our order is going to get executed. So you will have ample of time to place these trades, because you don't need to hurry up at all. So even I've seen after placing the trade, I don't know, maybe after 2 hours or 3 hours also it's going to get triggered. But once these levels are placed, you could just place it and you could continue with your work. You don't need to do anything. So you can directly click on these alerts and get the order executed and just continue with your day job. Or else, if you're a full-time trader, you can continue to monitor the trades and wait for the level to occur, on the first level to occur, so that you can go ahead and place the order for the second level. I couldn't paste the links in the chat, so maybe by the end of the session, I'll share the NR7 documents and whatever the position sizing rules that I have explained. In addition to that, whatever the documents that I am using related to this modified setup, I'll share that with the group. So, is there anything else that you wanted to get it clarified? Is there anything that you want me to repeat so that I could repeat it again? So the rules are simple, as I said. It's not going to affect your overall trading time, because as soon as you are going to get this alerts, you're just going to place it and just continuing with your day job. So I can be so sure that this particular system will definitely not take much time of yours. And if at all, if you're subscribing for this Telegram alert, it is much more easier, because all your work is done through this Telegram bot itself. You don't need to install any application. On a click of a button, all your trades is going to be taken care. And moreover, this is not a black box kind of a thing, because I have explained in detail about the system, how it works. It is essential to know how a system works, so that some people can get used to it. They'll have a strong belief towards it. If you're just blindly buying something, selling something based on some other calls, it would be difficult to get through it. So that is why we have explained in detail. And second thing is, these Telegram alerts is just for the execution purpose that we are charging it. There is nothing else for the trading systems that we are charging, because this trading system is already open. It is being used for by decades. Only thing is, we have modified it accordingly, so that people who are working professionals can trade with ease. So I'll share the Telegram channel link here, but if I share it here, it's not going to get pasted. Maybe I'll inform Scott to send it at later point of time. Maybe Scott can send it. So these are the links. Actually, I'm just sharing it with Scott so that he could share it with you guys at a later point of time. Please consider sharing trial for 2 to 3 days if possible for the alerts. Yeah, sure. So whoever people who have joined in this session, I'll consider giving you a trial period for a day or two, so that you could check yourself to see how it works, how it would benefit you. So to get a trial period, I'll just share you a link. You can join that link in a minute. I'll just share it here. So trial access. use this link to get the trial access for the next 1 week. I'll give you a complete trial access so that you can see how it works. And second thing is we are charging less than $100 for this complete no trial. I mean for the complete Telegram bot, because in the initial phase I would like to create awareness about this trading system and charge as low as possible, so that I'm not charging you much. But we have already explained in our Telegram channel that this particular trading system has already given a 55% returns so far. So once it crossed 100% returns, then we would be revising the charges, because we are so confident about this trading system, and moreover we are making the life easier for the traders by providing the Telegram bot. So we feel it is better to revise the charges at a later point of time, maybe in few minutes. It should be changed in next couple of weeks. So if people who wanted to just subscribe for it, you can subscribe for it through the link that I have shared, or you can also use this link to subscribe for it, because after a few weeks definitely we would be revising the charges to higher prices. But as of now we wanted to keep it at this level so that more people can use it and access it. And we know you can follow our Telegram channel, because we do conduct free sessions every month, or at least every 2 weeks once we do conduct a free session. So we'll keep our groups updated, and we do share all the trading articles here. So if people are not on Quora, I definitely advise you to join the Quora platform, because Quora platform is full of experienced traders. We have people like Scott, and we have many other people who keep sharing the knowledge very freely over there. So everybody there is, and moreover Quora is free from spam, so nobody is going to spam there by providing irrelevant information. So everything is legit there. So I would advise you to join the Quora platform also. Okay guys, thank you so much for your time. If in case if you have any queries, you can always drop an email to us to this email ID, support@squareoff.in. We'll get back to you with answers if you have any queries. Okay guys, I'm winding up the session. Actually, I'm not well today. I do not want to cancel the webinar at the last minute, so my voice is already gone bad now. I hope it helped most of you guys. Thanks for your time guys.